Varun Saboo too joins in on the show right now. Varun, hi, afternoon. Good to have you on the show. Do you think the index is headed in for some more days of consolidation, or is it pegging for a move up or down?
Yeah, hi. Thanks, Edino team, for inviting us on your show. I would just like to re-mention my positive stance as I've been coming on your show, and every time I've been coming and talking about it. I think this consolidation, if anything, is an opportunity which one is getting. We can clearly see in the underlying if you do a proper bottom up, and if you look to own stocks after looking at bottom up ideas, one could make good money. I think there is good enough move coming when it comes to stock ideas on a bottom up basis. I don't see any reason why one has to be negative on the markets currently. If we have to see the industry heavyweight sectors, something like an IT pack or say consumer pack, or overall consumption discretionary, BFSI, the outlook for all of them remains quite optimistic, honestly. So I don't see a reason why one has to be thinking twice in terms of how markets can rally. I hear a lot of arguments where people talk about Indian markets being expensive. They are expensive and they will remain expensive for the right reason of growth. So yeah, that's my take on an overall market basis.
All right. Hi, Varun. Afternoon. This is Shrishti also joining in. But off late, a lot of sector turning at play, and at least for today, we are seeing the defensives making a comeback. Help us understand how are you seeing the money flowing in which sectors do you see the move upcoming, or rather, the fund flow is actually getting more inflows right now and getting attractive?
See, honestly, defensives are rallying because there has been some correction in the in it's basically more of a catch up, honestly. I mean, some correction in the valuations is what I meant. But honestly, I mean, across sectors, if I see, there's no reason why we shouldn't be optimistic when it comes to say infra capital goods. We have seen a lot of activity pick up in the last 6 months, 9 months. Versus the lull we had seen before that, right? So things moved on that front. Then we had these series of cuts that we have been seeing, rate cuts. We saw a lot of liquidity push from the RBI. That gives a lot of positive fillip to BFSI over a longer term. NBFCs benefit in the near term and banks benefit over a period of time. I think BFSI also has been seeing good enough flows that we have been seeing stocks performing quite well, particularly the PSU banks that we saw sharp rally in which happened, which we saw after the policy. They all rallied more than 10%, 15%. I think there is a catch up pending. Generally, the expectation was that generally the quarterly for this particular quarter could be weak, but going forward, things look very optimistic from a BFSI perspective. So I think if anything, there'll be opportunity. If there's any opportunity, one should grab it. One should look at accumulating these names out here. Then there is this entire consumer discretionary space. Honestly, there has to be a lot of merit to own these names. There has been this 12 lakh rupee tax change, which is yet to show. We know about the rate cycle that rates have been on a cut. All these things are extremely pro-consumer. So I see all these heavyweight sectors doing well. And in addition, lastly, the IT sector, which is more about a play on the US economy. I think we are seeing some resolutions happening in terms of the trade. We are seeing some optimism around rate cuts there as well. So from their economy also, things should start shaping up well. I'm quite optimistic across sectors right now. I don't see any reason to be more skewed towards defensives or more skewed towards growth stocks. I think all of them should perform, and that's where we are extremely positive. Our house call is that index will be at 29,000 soon.
Okay, 29,000, that sounds optimistic given the way the market has been, rather flattish for the past more than a couple of trading weeks. But Varun, hi, this is Nehi also joining in. Along with FMCG and realty, you also have power stocks and oil and gas that have now made their way to the green. For oil and gas in particular, do you believe that all the good news is already priced in, or do you still believe that there is some room of investment here?
See, oil and gas is a very interesting opportunity, right? I mean, with the way crude has been, this is the best situation that one can have from an Indian markets perspective. Plus, we are going on hearing statements from OPEC nations, etc., where they are going on talking about increasing their production. So, for example, for this month, they have spoken about this was yesterday night's news, where they're talking about producing more 458,000 barrels, which puts pressure on crude overall. Reliance, we keep hearing that Reliance has been sourcing a lot of shale from the US, right? So that is again helping prices of crude and oil from our from India's perspective. I think OMC stand to be interesting bets out here. I don't see a reason why crude is going to shoot up anytime in the near future. We saw a little bit of a shoot up when this entire Iran-Israel thing happened, and after that it has come back to reality. So I don't see any reason why one has to worry around oil and gas sector, but one has to play it through OMCs and not so much from the upstream side, right? And obviously Reliance also falls into this space, and I think for Reliance, all of their business verticals are doing exceptionally well. So I see clear cut that all of these companies will keep performing. Oil and gas will remain in flame.
All right, so oil and gas, that's the sector to be, and specifically the OMCs that can actually do well. But Varun, since you have such an aggressive target on Nifty, that's 29,000, how do you see Reliance participating in that? Because of late, Reliance has been one of those interesting plays, have seen a good recovery from the April lows. A lot of news flow has started trickling in. So how do you see the move on this heavyweight?
See, for Reliance, I think from a telecom perspective, if we see Jio has been doing quite well for them. You can look at how Bharti Airtel's performance has been. So that part is going very well for them. Their retail business should see a lot of traction considering the fact what I just mentioned, what I just mentioned about how consumption should pan out going forward. And lastly, the oil and gas piece, which we spoke about, that oil and gas looks pretty good. So all three engines should do well for them, and that's the reason why I'm saying that I expect index to be supported by Reliance, oil and gas overall, IT, BFSI, consumption durables, and all of the other sectors are also going to work in tandem with it. Also the infrastructure space in India. So I'm that way quite bullish, and I don't see a reason why index wouldn't be there at 29,000.
Varun, what's the expectation from the earnings though? Where do you think the meaningful upside revisions and downgrades would come in?
See, the good part about this earnings is that the expectations are quite low. I think you will see more surprises on the positive side in the BFSI space because expectations are quite low. The commentary of most companies just before the silent period was quite somber. So you will see things working out better, say in BFSI. IT companies, if you remember, in the last quarterly, that was the peak of the negative noise where we were hearing a lot of issues around trade war, etc. And that's when, say, the industry leading companies like Infosys, etc., had come and cut their guidance sharply. So most pessimism is there, that's why I see that across sectors you'll see some positives coming rather than any negative surprises coming. Not that the expectations are too high. So I think the second half of the year is going to be very strong from the overall year's earnings perspective. But yeah, near term, at least in this quarter, I don't see companies disappointing on numbers because the commentary has already been quite weak on the corporate side.
So that's the take, but let's once again shift focus to the charts and talk about technicals. And Aditya, what are you making of some of these real estate counters that are in the green? They have been in the green for the most part of the trading day today. Names like Brigade, Prestige, Lodha, they're doing pretty all right for themselves given the overall market breadth. How are these stocks looking like on the charts?
They're actually looking quite good, Snehi. So it's a very stock-specific move that we're witnessing in the real estate space. And I think so this up move that we're witnessing in the real estate space is likely to continue for these names that you just mentioned. Prestige Estate looks very good to me on the chart setup. It's actually formed a decent base, kind of a double bottom in Friday's trading session. It was a hammer pattern as well. So from here on, I think overall the chart setup is also good. I think stock can easily test levels of 1900 on the upside with a good support on the downside at 1550. This is one stock that we've been recommending, and I think so should continue to do well. The second, Lodha is also looking very good. I think so after a decent bit of a cool off Stock is again headed higher to levels of 1550, 1600. Ajmera Realty is also looking good in the space. So this is also one stock which after a decent bit of a correction did take support at its key moving averages. From there, it's moving higher. So 1,000 rupees on Ajmera Realty is also something that can be seen. And one stock which was recently listed in this space that is also looking interesting. So all these real estate names which do look interesting, I think so can see a decent bit of an upside.
Interesting. For now, of course, it's really pharmaceuticals which is actually gaining ground. FMCG after the quarterly updates, that's where you're seeing some traction come by. Reliance, interestingly, is holding up about another 1%. It's had a decent last few days, and it's now scaled back to that 1545 odd level. And Asian Paints as well. Kunal, in fact, you were flagging off Asian Paints, right, earlier today. Do you sense that the stock may have bottomed out for the year ahead?
Yeah, looks like, Aisha, because the stock tested this 2100, 2150 level twice. In the first leg, the stock took almost 3 months to recover and come back to 2500 mark. In the second attempt so far, the stock has taken less than 1.5 odd month to try and come back to this 2500ish odd level. So this indicates that we are looking at a now fierce bottom for Asian Paints. My sense is that the stock should be able to break past about the 2500 levels over the very short term, and on the upside I would actually look at 2700, 2800 range for Asian Paints on the upside. So a substantial upside could be there for the stock over the near to medium term.
Right, so that's about Asian Paints. A substantial upside could be in the making. Let's watch out for that. But on the bottom of your screen, you also have the June general insurance data as well, wherein the general insurance premium has actually seen an uptick of over 5% on a YOY basis. And I was also seeing the data coming in from New India Assurance as well, which has seen an uptick of 10.5% in their premiums on a YOY basis. So let's watch out for that stock, and you can see the spike on the stock price as well. But moving on to another news flow, wherein the Delhi High Court has dismissed a plea by Turkey-based Celebi Airport Services challenging the decision of Bureau of Civil Aviation Security revoking its security clearance in the interest of national security. My colleague Samir is here with more details on this one. Samir?
In a major setback to Turkish ground handling firm Celebi, Delhi High Court in its verdict has upheld the central government decision to revoke the license of Celebi. So Delhi High Court has dismissed the Celebi's petition that was against the BCAS order, Bureau of Civil Aviation Security's order to revoke the Celebi's license, which is there for ground handling services. And this revocation of Celebi's security license was on the grounds of national interest. So the order that was given by BCAS in the month of May, it mentioned that seeking the national interest, the security clearance of Celebi, it has been revoked with immediate effect. And let me also add over here that this entire development or the step came in during the Operation Sindhu when it was carried out, and Turkey actually extended the support to Pakistan, and post which there was a significant development in the aviation space that BCAS under the Ministry of Civil Aviation revoked the security license of Celebi, and this was challenged by the Turkish firm in Delhi High Court. But now, after a series of hearing, Delhi High Court has actually upheld the central government decision, and which is a major setback to Celebi. Now, let me also tell you that Celebi is present in over 9 airports across the country, but yes, this means that this is going to have a major setback. But also over here there are a couple of other pleas which are going in different high courts as well. For example, in Madras High Court, a similar kind of hearing is there. A petition has been filed by Celebi, and in that case also a next date of hearing that has been given for August 4. But in Delhi High Court, they have definitely got a setback, and Delhi High Court has actually dismissed the petition filed by Celebi Aviation.
Okay, so negative news coming in for Celebi because Delhi High Court has just quashed their plea. So, well, yes, that's the latest update coming in on this case. Amir, thank you so much for joining us with all of those details. But time now to get in some BTST ideas by our technical experts. And Kunal, you go first. What would be your BTST picks for the day?
So I'll go with 2 buy calls, one from the pharma pack, Sun Pharma, more of a preemptive contra buy, expecting the stock to get back into a swing breakout mode on the short term charts. So 1710 is a target for Sun Pharma, stop loss at 1650. And Apollo Tyres is something which has bounced back from its critical moving average on the short term chart. So I think at 460 level thereabouts, it looks fairly attractive. Targets of 480 is what I would peg for Apollo Tyres, and stop loss at 450.
All right, so those are the buy calls coming in from Kunal. But Aditya, what about you? Which is the stock making to your radar?
So I've got a couple of buy as well, Shrishti. So the one that I like is Cummins India from the capital goods space. I think so. This is one stock after a bit of a good consolidation phase has now broken out from a cup and handle pattern on good volumes in trade today. This up move is likely to continue for next two trading sessions at least. So I've got a target of 35.50 on the upside with a stop loss at 33.50 on the downside. I have a buy recommendation here. Second is Petronet LNG. After a decent bit of a consolidation, stock is now getting up for a breakout from a downward sloping channel. So at current levels, I'm preempting a breakout on the upside in a day or two in Petronet LNG. So I've got a target of 325 to about 340 on the upside with a stop loss at 297 on the downside.
Kunal, what about IT? And I ask because, come Thursday and we'll have TCS declare its numbers and then, so on and so forth. TCS, of course, will report its numbers only post-market hours. So Friday morning is when we're going to be reacting to those earnings. But do you see anything material on the charts? While they may have lifted off from the 52-week lows, but can they finally make up and catch up with the rest of the sectors?
Well, I think what the markets and the positioning right now shows, Aisha, is that markets are waiting for the results to be out. I think before that, they would want to commit positions into many of these IT names. So what we've seen is that most of the IT stocks have just gone into a very listless kind of a trading range, whether it's large cap names like TCS, Infosys, Wipro to a larger extent, HCL Tech, Tech Mahindra, which are a slightly more high beta, larger cap names, or even the mid cap end of the mid cap end of the IT stocks, where you've seen Coforge, L&T Infotech, Mindtree, Technology Services, etc. I think these stocks have more or less gone to their individual sideways trading ranges. There is no major volume pickup, and these stocks are gradually going into a zone where the indicators have come back into neutral territories for these names. We've seen RSIs of 40, 45 thereabouts for many of these IT names. That generally is an indicator that traders are not looking to build extremely high positions over here, and they would want to maybe get a precursor of individual results for these large cap IT names. And I think once that starts off, and assumingly if the initial tone is on the positive side, then I would believe that you might probably see a perk up into many of these other IT names. So I think it's more of a wait and watch for the IT stocks, and eventually post results, the volume flow would probably decide that whether we are looking at a trend picking up into the IT pack or not.
All right, so that's the take coming in on the IT space. But Aditya, although the Nifty Bank as an index was trading in the red for majority part of the day, but one of the counters, that is Kotak Mahindra Bank, that is showing a good uptick in today's trading session. A 1% jump is what I'm seeing, and it's the second straight day where the stock is seeing a bit of an uptick. What do you make out of it? And because the banking index is not doing that well, but Kotak Mahindra Bank is going just the opposite. So what's the sense that you're getting on this stock?
So Shrishti, it's more of a buy in your portfolio and hold it, because we are seeing this stock going up after a very long consolidation phase. We've seen years when the stock hasn't done much for itself. Then eventually we had a breakout in the stock, test levels of around 2290, 2300 on the upside. And from there, it entered into a consolidation again. If anything, I think this is an opportunity to initiate a fresh long in the stock at current levels. If you want to place a stop loss somewhere around 2050, 2100, it's a good support area for the stock. And my sense is from medium to longer term, you will see the stock hitting levels of 2600 on the upside. So within the large cap banking space, I think there are two stocks which clearly stand out for me in the private sector space, the Kotak Mahindra Bank and HDFC Bank. And I think so both these stocks should be in your portfolio. Matter of time before you will see another 15 to 20% kind of an upside in both these stocks if you hold it for at least a year or so. So definitely it's a very good looking chart setup, and I think so one should add at current levels also Kotak Mahindra Bank.
I want to check in on trend. Of course, this was the big crack in Friday's session. The stock fell about almost 11% after the management indicated that in their quarterly update, and that quite didn't go well with the markets. But right now, it's some stability, one can say, although it's pretty erratic. Even right now, just about hovering around that 5,500 odd mark. That's trend in a trade for you. Can I just very quickly check on the charts and whether it can go back to those 4,500 kind of lows that it did strike, I think, March end or so?
Yeah, but I don't believe, Aisha, that the stock should be good for 4,500 levels. In fact, the stock has gone through a major grind, and in the last 5-6 months back, there was a major price correction for Trend. The stock, I think, a matter of a week or so, had fallen back from 6,000 to 4,600 thereabouts, where it formed a major low end of March 2025, and from there the recovery was very slow, gradual, and it took its own time for Trend. These are the kind of recoveries which generally tend to last quite long. After this kind of a price correction, which we saw last week for Trend, where the stock was down 10-11%, I don't see any major follow through downside for the stock price. Yes, eventually, over the next 1 or 2 weeks, we may see another 100-150 point kind of a price correction, which could be more like an inertia correction for stock prices after such kind of a sharp drop. But then eventually they come back into much higher support territories than the previous leg. So I would believe that 5,200, 5,300 level for Trend should actually be taken as a very good contra opportunity for traders to build long positions.
Okay, so that's the take on Trend and the overall sector as well. But Aditya, as we wind down for today's trading session and the kind of move we've seen on the Nifty, we're trying to claw back into the green right now. Can we expect a muted session tomorrow as well?
Sneh, I think there could be a bit of an up move into tomorrow's trading session, if anything. I think one should, and if you're a braveheart, I would suggest actually to go for a long trade on Nifty and see how market opens tomorrow. My sense is you will have a gap up opening in trade tomorrow. Could be a small one, but you will have a gap up opening, and markets should test levels of 25,700 maybe in a couple of trading sessions. So I'm bullish on the market from here on with a stop loss at 25,400 on the downside. I would be a buyer in the market.
All right, but Kunal, are you also anticipating a gap up start for tomorrow?
I think maybe a 40-50 point gap up for the index, but not much in terms of the index moves, largely because I think the markets are just waiting out for maybe the first phase of the outcome in terms of results. I think that would probably decide the tone of the market in terms of trend. But I strongly believe that this 200 point dip, 250 point correction, what you've seen the last 4-5 days for the index, I think all of these dips are very good opportunity for contra traders to try and build long positions. So it's more of a gradual building of long positions which one has to do rather than playing for those very tepid upsides of 40-50 points on the index.
All right, so that's the take on the index coming tomorrow. But one of the other stocks that we have been flagging off is New India Assurance, because we just had that June general insurance data. And Kunal, a quick chart check by you. New India Assurance, the stock was absolutely flat now at the day's highest point with a 1% uptick. How do you see the setup of this particular stock?
Yeah, it's been an okay chart. Especially it's not as if that the stock has done any major price uptrend in the last 2-3 months. Prior to that, the stock had corrected from 300, 320 levels in 2024, had come back to 140, 150 mark, and now from 150 levels, the stock is seen a mild bit of a pullback. I called it mild because of the way the stock had corrected more than 50% in the in the last 6 months. So I think in that sense, maybe these kind of news flows could probably just about keep the stock afloat above its critical short-term moving averages, but nothing major in terms of the chart pattern to call it as a reversal or a trend on the upside for New India Assurance.
Are there any trends in particular you think would continue tomorrow too? Maybe IT, undertake, or rather IT profit taking, defense profit taking, or for that matter, FMCG outperformance. Any continuation in the trends that you foresee from today?
I see an FMCG continuing to outperform Aisha in trade tomorrow, and I think so. Defense could make a comeback in trade tomorrow. A couple of defense stocks are actually looking strong. My sense is you will see defense stocks actually coming back tomorrow. Names like HAL looks interesting to me. The BDL, BEL, all these stocks I think so can make a comeback in trade tomorrow. And my sense is these FMCG stocks are likely to continue its up move. I would also watch out for some of the metal names, especially names like Tata Steel, JSW Steel, and Jindal Steel. These three stocks, I think, if they start somewhere flattish to mildly bullish, they can actually see a good up move, because in late trade, I'm seeing a bit of a short covering rally in some of these stocks.
Okay, so that's what the trade setup for tomorrow could look like. On that note, Kunal and Aditya, thank you so much for joining us and sharing your take on the market with us.